Hello, my friends. Do you live in Oklahoma? Do you want to save on your taxes? Well, this video is for you. I'm going to go over 10 ways that you can legally reduce your Oklahoma state tax liability. Number 1, no tax on Social Security benefits. This makes it great for retirees. So you may still owe federal taxes on Social Security benefits. They can be partially taxable on the federal level, but not in Oklahoma. No taxes. This is better than some states that follow the federal example of partially taxing Social Security benefits. So in Oklahoma, remember, zero tax Social Security benefits. What else do we got? Number 2, we have Retirement Income Exclusion in Oklahoma. So this goes along with in the same area, but it is in addition to Social Security benefits not being taxable. Retirees can exclude up to $10,000 per year per person. So a married couple, $20,000. And this applies to pension payments, 401k, or IRA withdrawals, distributions. So this is 1099-R income. Again, $10,000 per person, $20,000 for a married couple per year, and this is in addition to Social Security being non-taxable. This is really going to help retirees reduce their taxable income in the state of Oklahoma. What is next? Number 3, we have the Oklahoma 529 College Savings Plan. Now, this plan is great if you have educational expenses in your future, or your kids' future, or your grandkids' future. You can contribute to the Oklahoma 529 plan, and these contributions, here's the deal, they're tax deductible at the state level. So you put this money in tax-free. The money grows tax-free, and when you withdraw the money, if you use it for educational expenses, guess what? Tax-free. All right, there's our theme. One thing to keep in mind is these contributions are not tax deductible on a federal level, okay, but they are on the Oklahoma level. Single filers can deduct up to $10,000 per year for contributions, and married couples, $20,000 per year. And again, these are going to reduce Oklahoma state taxes. What can they be used for? Well, this money can then be used for K through 12 tuition for private schools, for example. Obviously for college expenses, all kinds of college expenses. And also it can be used to pay back student loans. There you have it. It's a great benefit, and honestly, it's one that's often overlooked because of the lack of a federal element, but this is money you can really save on the Oklahoma side. Now, number 4, military retirement and active duty military. So what about for military retirees? Well, check this out. 100% of your pension is tax-free in Oklahoma. That's right, there's no limit on that. So if you're receiving military retirement pay, it's not taxable in Oklahoma. What about active duty? Well, active duty personnel who are Oklahoma residents when they enlisted, if they're stationed outside of Oklahoma, they don't pay Oklahoma state taxes on that military pay. Okay, this is a great state for those that either were or are currently in the military. Now, what about capital gains? This one is interesting. Oklahoma, this is a little, well, let's play this out. If you sell Oklahoma-based property, stocks, or businesses, you can exclude up to 100% of the capital gain from your state income tax. So the capital gain is tax-free. Now, what's covered in this? Well, if the real estate has to be held for 5 years, that's a longer holding time than, say, the federal level, which only to qualify for long-term is only 1 year. That's the date most people think about when they think of holding periods for capital assets. They think of 1 year, but for this exclusion in Oklahoma, 5 years. What about for businesses and stocks? That holding period is only 2 years. So you have to hold those assets for 2 years in order to exclude them from your Oklahoma income tax when you have a capital gains on the disposal or when you sell them. Okay, number 6. Now, follow along on this one. This one's a little tricky, but this has to do with the child care tax credit and or the child tax credit. So child care, this is the dependent care. This would be like when you put your child in childcare so you can go work. And the child tax credit is simply the credit for having a child. So if your federal adjusted gross income is below the requirement, at this point is 100 grand. So if your AGI on the federal level is above this, forget about it. But if it's below 100 grand, you can claim either, okay, one or the other, 20% of the federal child care credit or 5% of the federal child tax credit. So there's a little bit of figuring that goes on in here, but this credit can help offset child care costs and dependent expenses. Number 7, the Oklahoma Sales Tax Relief Credit. Okay, not the biggest credit, but I like saving taxes even if it's a few bucks. So if your income is below the threshold, either 20 grand if you're filing single or 50 grand with dependents, you may qualify for this credit. The credit is $40 per member of the household. Now, what's nice about this credit is that it's refundable. So even if you don't owe any Oklahoma state taxes, you will still receive this refund. For example, family of 4, $40 each, 160 bucks coming your way just for asking. All right, you can't beat that with a stick. Number 8, itemized versus standard deductions. So in Oklahoma, you can itemize your standard. You can choose either one. You can itemize your deductions or take the standard deduction. But here's the rub. Oklahoma did not follow the feds when a few years back they increased the level of the standard deduction. So the Oklahoma standard deduction is about half of the federal. And what's happened in reality is this jump we've had where the federal standard deduction increased so much, it really made itemizing the deductions not beneficial. People don't have that much of itemized deductions to claim, and so a lot more people are taking the standard deduction on the federal return. But then when you jump to Oklahoma, the standard deduction is half as much. So you're better off, a lot of times, you're better off if you can itemize, or even, let me put it another way, even if it's not beneficial to itemize on your federal return, you can still get a large benefit from itemizing your Oklahoma return. And I gotta be honest with you, a lot of people miss this, especially those that self-prepare their tax return. They focus on the federal and they think, hey, the standard's better, and they don't even think about how reporting these itemized numbers on the Oklahoma return will reduce their state taxes. So keep that in mind. That one can be big. That's also one, if you find out, here's the other little trick. If you find out that you missed it when you're doing this year's return, you can go back and amend old returns and grab that money from not claiming it in the past. You can go back and claim it and get refunds from older returns if you amend. Okay, let's move on. Number 9 is the Oklahoma Earned Income Tax Credit. Okay, this is different than the child care credit and the child tax credit. Now we're talking about the earned income credit, which a lot of time has to do with kids, but not necessarily. So who's going to qualify for this? Well, just like on the federal side, this is for low income taxpayers, and the Oklahoma is going to follow the same guidelines as the feds. So if you qualify for the federal earned income credit, you're probably going to qualify for the Oklahoma earned income credit. And just like the federal, the Oklahoma Earned Income Credit is refundable. So even if you don't owe Oklahoma any taxes, you can get this money back. And this is going to provide a direct refund for low-income individuals and families. It's often overlooked that individuals qualify for this also, but it's usually kind of described as a family credit, but individuals qualify for this too. Okay, lastly, number 10, self-employed and small business tax savings. This comes in the form of the QBI, or the Qualified Business Income Deduction. And Oklahoma mirrors or follows the Fed on this one, and you can deduct up to 20% of qualified self-employment income from state taxable income. Okay, just take it off, slice it, dice it, get rid of it, 20% of it gone. There's also a job hire tax credit, or a job creation tax credit in Oklahoma. And this one is available for new hire, so businesses hire new employees, and the businesses, in order to qualify, they have to be in certain industries or areas of Oklahoma in order to qualify for this. But the state tax credits, boom, reducing your state tax liability. So there you have it. Those are 10 ways to legally cut, slice, and dice and get that Oklahoma state tax down as far as possible. Then let's talk about these in general to summarize here. We've got benefits for retirees. We got savings for low-income folks. Number 3, we also have it for families with the college savings and the different credits, earned income, dependent care, those kind of things. Then we've got business owners and investors through the QBI, through the capital gains, through the new hire credit. And then lastly, we have military members by excluding the retiree pay from Oklahoma taxes and active duty when you're stationed outside of Oklahoma. I hope this has helped you with your Oklahoma state taxes. Like, share, and ring the bell for more tax tips. Who's doing your taxes?